Greetings, everyone. Good morning, good afternoon, good evening, depending on where you're joining us. We're so glad you're here. My name is Chris Tsakalakis. I hope I'm pronouncing that correctly. It is my honor and privilege to be Kiva's CEO. I joined Kiva last April because I wanted to use my 30 plus years of strategy and technology experience to improve people's lives around the world. I'm thrilled to be with you today.
And hello and welcome, everyone. Hi and welcome, everyone. I'm Maya Koringal. I'm the co-managing partner of TPG's The Rise Fund, our impact fund, and I'm a longtime Kiva board member. I started my impact investing career back in 2004, and together, Chris and I have the privilege of welcoming you to the Gender, Equity, and Financial Inclusion Forum. Working together to advance women's economic empowerment is critical to a healthy, equitable world, and we thank you for taking the time to join us in this effort.
Thanks, Maya. Kiva is hosting this forum with support from USAID. Over 2 years ago, Kiva and USAID began a partnership with the aim of creating funding solutions that directly address the needs of women borrowers around the world. This partnership is why we're all here, and we want to extend a special thank you to USAID for your partnership and support of this forum, and also to the Kiva team for your hard work in designing the program and gathering all of us this week.
So coming together as a global community around the topic of gender equity in finance is crucial to furthering our collective mission. By engaging in conversation, listening to different perspectives, and learning from one another, we are more able to solve complex problems than we are on our own. We'll get to better solutions. Present here today are hundreds of industry leaders from more than 50 countries, including impact investors, gender experts, and innovative business leaders. There is much that we can learn from each other, and I know our speakers are excited to ideate with all of you today.
As you all know, International Women's Day was honored just last week on March 8th. At Kiva, each year, we look forward to the opportunity this day brings to amplify one of our most core driving forces, advancing women's economic empowerment. This focus is the lifeblood of our work. Over 80% of Kiva borrowers are women, representing more than $1 billion in loans since our founding in 2005. As impressive as $1 billion sounds, it has only helped a fraction of the women who are still excluded from economic opportunity. More than 1 billion women remain outside the global financial system. While we've made important strides as a field, we're far from the potential that true equitable access to capital can unlock. Adapting to and learning from women entrepreneurs, especially those from marginalized and underserved areas, strengthens our systems. We believe this path is essential to achieving the UN Sustainable Development Goals and building a more prosperous and resilient global community. Is why we are so honored to kick off this important forum.
So one of the ways that Kiva has been working to address the gender gap in women's economic empowerment is through our partnership with USAID. With design funding from USAID, Kiva has been working to identify innovative approaches to catalyze investment for women's economic empowerment and equality in emerging markets, as well as to develop a framework to measure the impact of that investment.
Our teams are dedicated to advancing gender equity globally, and through opportunities like this forum, we're excited to gather like-minded individuals to better understand how and when gender lens investing is most successful. We hope these next 3 days will be a time for each of us to learn new ways to advance our shared gender equity goals.
So with that in mind, we invite each of you to participate and engage in dialogue throughout the next 3 days. You can do this by using the chat function to amplify a great idea or to offer a new perspective. We also hope that you will join the networking sessions offered later today and tomorrow to meet with like-minded peers. One final item, participants are able to turn on live transcription if you prefer to include subtitles during the forum sessions.
We hope you'll feel inspired and take learnings back to your organizations and continue these conversations with your greater communities, whether online or novelly in person. Once again, on behalf of Maya and myself, thank you for joining us.
And it's now my pleasure to turn this welcome over to Jamil Biggio, representing our partner, USAID. And I'm so sorry, I'm certain that I mispronounce your name. Chris and I both have tough names too. But Jamil, thank you for being here, and the floor is all yours.
Oh, it is such a pleasure to be with you both and to be with everybody here with us today. Hi, everybody. I'm Jamila Biggio. I'm USAID's Senior Coordinator for Gender Equality and Women's Empowerment. My thanks to Chris, Maya, and the Kiva Capital team for co-hosting this event with us. We truly value our partnership with you over the last few years and are excited to see this, the first annual Gender Equality and Financial Inclusion Forum hosted by Kiva. Congratulations. This is such an important space to bring together partners from across the gender lens investing ecosystem. We're here to share practices and challenges, to really think together and challenge ourselves how we can do more to advance women's economic empowerment and financial inclusion. We've collectively made truly significant strides towards gender equality and women's empowerment globally, but widespread gender gaps persist, unfortunately exacerbated by the COVID-19 pandemic, and this includes in the sphere of women's economic empowerment. Take our focus today on financial inclusion. The IFC has estimated that in emerging markets, there is a $287 billion annual gap in financing for formal women-owned small and medium-sized businesses, and more than 70% of women-owned small and medium-sized enterprises have inadequate or no access to financial services. That's a gap that we together can close. And when we do that, when we enable half the population to fully participate in the economy, then we will see benefits across the board for their families and communities, for businesses and investments, and for countries and their economic growth. So how can we do that? To close the financing gap, women need to be involved at every level of the financial services industry, from banking agents to branch managers and fund managers, to the boardroom and C-suite of major banks and investment firms. This creates opportunities for more diverse decision-making that affect banking and financial outcomes for women. This will also benefit companies' bottom lines, because we know that companies that are more diverse and gender balanced outperform those that are not. At USAID, we recognize that increasing financial inclusion contributes to women's economic security, which in turn reduces countries' poverty and grows their economies. So one of the areas that we are focused on in this space is working to de-risk innovative financing. A great example of this is USAID's partnership with Singapore-based Impact Investment Exchange, where together we listed a women's livelihood bond series, which totaled $150 million of innovative debt securities on the Singapore Stock Exchange. This innovative financing effort raised private capital to finance over 3 million women-owned small and medium-sized enterprises in the Indo-Pacific region. But gender lens investments such as this one are still too niche and too rare. We need to increase them. We know that the vast majority of banks offer products tailored more to men, that they do not consider the specific needs of their women customers. We know in some countries that discriminatory laws and practices make it harder for women to qualify for credit at financial institutions, where they can't inherit family wealth or land, where they have fewer assets, where they can't sign legal papers without a male co-signer. We're collectively working to remove barriers like these and to reduce the gender bias in lending and other financial services in order to level the playing field for women to succeed in the economy. We can do more to, for example, increase land titles for women, use psychometric testing to secure loans, hire more female bank agents so that the banking sector is more gender balanced in its workforce, provide training on working with women clients. We can do more to gather sex disaggregated information about men and women as banking customers so that more competitive banking products and services can be offered. We need to take an intentional effort together to shift the social norms and systemic bias that have for too long resulted in a male-dominated industry that constrains lending and other financial services for women. Collectively, if we invest in this, financial inclusion will improve, economic growth will improve, and the bottom lines of the companies involved and investments involved will improve. So this is, as I said, an area that USAID is focused on, doing our part to close the gender financing gap. We've built a $23 million gender lens investing portfolio of activities to advance women's economic empowerment. And this includes the critical partnership with Kiva to identify innovative approaches to catalyze commercial investment for gender equality and women's economic empowerment. So I want to thank you all for taking time out of your busy schedules to participate in this, Kiva's first annual Gender Equality and Financial Inclusion Forum. Although the field of gender lens investing has grown measurably in recent years, most of that focus has been on channeling capital to women-owned and women-led ventures and enterprises, which is critical and an important step, but it's not the full picture. We're thrilled that we have the opportunity today and over the course of the forum to talk more about how to embed gender smart principles into the DNA of all companies, so that we're both channeling capital to women-owned, women-led ventures and enterprises, and also helping all ventures and enterprises to have more gender smart approach to the work that they do. And this will, again, make them more profitable. It will enable them to better partner and invest in women, and it will inspire future generations of female founders and entrepreneurs. So over the course of this forum, I encourage you to ask yourselves with which perspectives, innovative ideas, evidence to close the financing gap resonate most with you. What can be applied to your work? How can you take this forward to collectively do more to close the gender financing gap, to close the gender economic opportunity gap, and to ensure that by doing that, we help communities, companies, countries grow and together better reach the Sustainable Development Goals. Thank you so much for being here.
Hi, thank you very much, Jamila, for your remarks. It's been a pleasure working with the USA team on our shared goals towards advancing gender equity. Hello, everyone. I'm Celia Wong. I'm the Managing Director with Kiva Capital, overseeing our gender lens investing work. But today, I have the pleasure of being your moderator for the forum's opening session. Before I introduce today's plenary speakers, we would like to get to know all of you a little bit more. So we'll have 3 quick polling questions, and that should come up on your screen. The first 2 questions: what type of organizations are you representing? And in which regions do you or your organization operate? In terms of organization, we have the options of investors, non-governmental organizations, investment advisory, consultant, financial service provider, social enterprise, academia, and network, which include organizations that bring together a lot of the activities and field builders to the sector. In terms of regions, we have in Africa, Asia, Europe, Latin America and the Caribbean, Middle East, North America, and Oceania. So we would like to see if you're ready to bring the selections together. I think we have the results. We have a lot of non-governmental organizations and not-for-profit organizations joining us today, followed by investment advisors and investors. And we also have a diversified representative on the other organizations. So we welcome you. And in terms of region, I can see that, wow, a lot of us, you are joining from Africa. So thank you for dialing in later in your hours. And then we also have North America and LATAM and even some Asia participants. So thank you for joining us with this time zone. And we have a second question here. Want to understand, what is your familiarity with gender lens investing? Right, that's great. The majority of you are somewhat familiar with gender lens investing. So I hope our deep dive into the conversation will be really beneficial to you and find some new areas of development for you and all of our participants today. So it's amazing to have such a diversity of perspectives joining us and working across the world. So whether you are new to gender lens investing or we call yourself an expert, I've no doubt that you'll be able to learn some new things over here in the next 3 days. And now I would like to invite the first panel to join me for the opening conversation on the state of gender lens investing market. Our first panelist is Laura Fernandez-Lord, who is the head of Women's Economic Empowerment at the BBVA Microfinance Foundation, which invests in a group of microfinance institutions in Latin America. Next, we have Tom Jones, Executive Vice President and Chief Operating Officer of Women's World Banking, with a global network of microfinance institutions as well. Laura and Tom here represent the practitioner perspectives in financial inclusion on our panel today. We also have Eric Stevenson, who joins us today wearing 2 investor hats. Eric is the Director of Operations and Client Service at Align Impact, an investment advisory firm. He will also share his perspective as an impact investor for Family Office, the Cordes Foundation. Bringing all the perspectives together is Sana Kanapia. She is from Gender Smart Investing as a field builder that also echoes the investor perspective, as well as being the GLI, gender lens investing, and gender domain expertise. And before we jump into the conversation, I would like to invite you to chat your questions for the speakers, and we'll reserve time at the end of our session to get to as many questions as we can. So for this session, I would like to kick off with questions for the practitioners on our panel here. In terms of COVID, in the last 2 years have really created a lot of changes to our world, and more so for people that are in the developing countries and emerging markets. And I would like to hear what are some of the first-hand observations through your organizations around women getting adversely affected by COVID. And if there are regional differences in terms of the impact on gender equity. And maybe I can ask Laura to start.
Thank you, Celia. I would like to thank Kiva and USAID for inviting us today to this important forum on gender equity and financial inclusion. Well, in Latin America, female entrepreneurs were especially impacted by COVID due to the higher levels of vulnerability and informality. Gender gaps have widened in all dimensions. Women lost almost 60% of labor in our footprint, and the extreme poverty levels rose to almost 119 women for every 100 men. And this situation was caused by the intersection of 3 conditions. First, their vulnerability. Almost 70% of our total clients in extreme poverty are women. Unpaid care work. Almost half of them were leading single-headed households, and they lack social protection, which was key during COVID time, and also the type of economic activities they pursued. They were concentrated in retail, food services, clothing, or street vending, in urban areas that suffer important mobility restrictions. So what impact did we see through our data and our surveys that we conducted in April and November? Well, first, in April 2020, our survey showed that half of them had to close their business, in contrast to 40% of men. And almost 8 out of 10 reduced their levels of sales. If we consider both indicators, 62% had a strong impact in their activities. And half of them saw their saving capacity completely curtailed, since many of them use their savings to go through these difficult times, together with family support and also access to credit. However, when we looked at data in November 2020, a similar percentage of men and women businesses were open, around 83%. But their economic activity was no longer the main source of income for half of them. So data showed that many of these women diversified or reoriented their economic activities during this difficult period of time. And they also started doing home delivery or digitizing their businesses. What about 2021, where our data is showing that women are still more vulnerable and poor than prior to the crisis? They have not yet recovered from the shock of the pandemic. Their businesses' growth rates in terms of asset sales are inferior to men's, whereas before the crisis, before COVID, they were superior. We also have seen that they do not get out of poverty at the same pace as before. In year 2, only 24% leave their initial poverty levels, whereas before 1 in 3 left their initial conditions of poverty. And they are also more single-headed, having more single-headed households. Of our total clients, 56% are in this situation, and of new clients in 2021, 60% are with these kinds of households. So this is also constraining the type of business and activities they can pursue and the time that they can dedicate to them. So that's the overall picture that I can share with you from our experience in Latin America.
That is really disheartening information. And Tom, I would like to also ask you to share your perspective of what you've seen on the ground.
Oh, thank you, Celia. First of all, I also want to thank Kiva and USAID for allowing us to have this conversation today. I think it's an important one that we have to continue. And I do want to reinforce what Lara was saying too, because I think we are seeing very similar trends, percentage of impact across the regions that we're working in. Southeast Asia, South Asia, and Sub-Saharan Africa in particular is where much of our focus has been over the past few years. Just reinforcing also that women are disproportionately impacted, and completely with every metric across the board. In particular, the job loss was really significant. But what we did see was women going into the areas of starting their own businesses even further. And so we started thinking about access to finance and solutions to deal with this and provide them the types of support they needed. It was a good thing and a negative thing at the same time because of the barriers that were being faced. So I just wanted, as I was preparing for this, I wanted to think about focusing on 2 particular areas where we saw adverse effects, but I also want to share an area where we saw some positive change take place. And digitization is absolutely key. I think most of us realize that digitization was the wave of the future, but it was more important than ever during COVID to be able to accelerate that. And in particular, we saw extremely fast responses from certain governments and regulators. We saw it taking place in India and Tanzania, where we saw very strong G2P processes being deployed and payments of benefits being distributed. What it did, though, was really expose that gender gap in the areas of the barriers that the women had to face in order to access those finances and those benefits. In particular, IDs came into question. The proof that they owned these particular benefits. The access to mobile phones is still hindered. So if you didn't have that easy access or control over your own phone to control access to your own account, it just didn't happen. And finally, we also saw that financial education and trust is still a barrier. There needed to be programs deployed to help them understand which benefits they actually had. They weren't even aware they were being distributed or how to access them. And then once they were there, they didn't know whether or not to trust, what would happen if I went to try to access. The other area that which we saw too was a lack of preparedness. So Women's World Banking works with a network of institutions. Our network was really well formed, really well governed, but at the same time, COVID showed disruptions which we never saw before. And a lot of that was in the decision-making positions within the organizations. So we saw CEOs and other senior management folks who were locked out of their country, couldn't participate in the governance and decision-making, or, saw the ultimate result of being affected by COVID and dying and not having proper succession planning in place. And the result of that ended or demonstrated the fact that key safety net programs, which we were personally ready to launch, could not take effect, such as our caregiver insurance in certain areas. And not having those safety net programs within the financial system really resulted in women getting hurt even further. The one thing that I want to reflect on that was really positive, though, is we did see an increase in savings activity by women. It was smaller, but it was less frequent, but it was more consistent and at larger numbers. And so, when we think about the safety nets of the future, I think savings has to be incorporated into that, and giving more women access to do so.
And I want to ask if any other panelists would like to reflect on this, Sana?
Yeah, happy to. And again, thank you so much for the opportunity, Kiva and USAID. Delighted to be part of this forum. So first of all, thank you, Tom and Laura, for sharing some of those more sobering statistics on the ground and the picture in terms of, just, that first sort of shock reaction and then the other impacts. I think the other aspect is that COVID has also sort of shared a light on some of the underlying structural inequalities around care, for example, and workforce participation. And without those fundamental pillars that build the infrastructure that then enable women-led owned businesses to be more included in the financial system. So there's definitely that aspect to acknowledge. But Laura, maybe to pick up on what you were raising in terms of the agility and the resilience, I think there's also aspects around some positive aspects that we can shine a light on. And if we reflect a little bit on some of the funding flows, there's no doubt that yes, for the most part, not enough capital is going to women-led owned diverse businesses. 2% of venture capital globally goes to women founders and diverse founders. It's even worse, 0.5 percentage point in the US, 0.002% in the UK. So there's no doubt that we have a long way to go. But if we look, for example, at Project Sage data, which is coming out of Wharton Social Impact, and Suzanne Beagle, who's one of the founders of Gender Lens Investing, they've been tracking private markets funds across different types of structures. And over the course of the last 2 years, they've seen that grow to about 206 funds now with the gender lens, and that have raised about $6 billion. And then similarly, I was looking earlier at the 2X Challenge, which has mobilized $11 billion in gender lens investments with a further commitment of 15 billion. And I think of that 11 billion, one of the largest portions is in financial services. And so there are also these other data points that are speaking to the momentum around gender lens investing and the role that it can play. And I think some of what our keynote speaker was saying around really making sure that the infrastructure is in place to really provide that enabling environment, that's something we should be taking away also from the crisis and thinking about that as investors, as other intermediaries. So sobering, but there's also lots of shoots of hope. So back to you, Celia.
Thank you, Sana. And I think what you just talked about in terms of increasing funding into the gender lens investing space tie into what I want to discuss into the next question is, we have seen what the challenges have been on the ground, and I would like to hear what you have seen in terms of investors taking action in response to this widened gap in gender equity in the last 2 years? And maybe Eric, I can get you to start to talk about what you have seen happened in the last 2 years.
Yeah, thanks, Ellie, and thanks for Kiva and USAID putting together this forum on such an important topic. So at Align Impact, many of the private debt funds that we have our clients invested in, and that the Cordes Foundation is invested in, has a gender lens with predominantly female borrowers. And within those types of funds, you really have 4 levels. So you have investors, the fund managers, MFIs, and then the borrowers. And what we saw during COVID was you had all 4 of these folks needing to be flexible with one another during really a time of unprecedented uncertainty. So the borrowers were making decisions on what bills to pay versus the uncertainty of the future. The MFIs needed to manage a portfolio of loans and know how to manage receivables versus when to be more flexible and potentially modify those loans. You had the fund managers, right, many of which had these semi-liquid gates that allowed investors to come in and out. And they had to make decisions on whether to keep those gates open or whether to close them. And then you had the investors that really had to reflect on liquidity. During the time of uncertainty, you see a lot of folks look to their liquid portfolio and in these types of funds, these semi-liquid portfolios, and say, should I pull out? Should there be a run to safety or to cash or other types of fixed income products? And so as the fund manager, they're also thinking, do they need to keep cash on hand, or is there going to be cash drag? Do they close the gate or not? And if they were going to close the gate or leave it open, how do they really come up with the right net asset value to allow investors to get out? And so if I'm the investor and I don't need the liquidity, I was okay with the gate being pulled down, just thinking that, well, maybe the NAV was a bit too high, and then you'd have to maybe update that NAV in the future. But some of my peer investors were potentially able to get out at a higher NAV. But if I needed liquidity, I was kind of focused in the opposite direction of, gosh, I hope they don't pull the gate down, and I hope they're able to come up with the right net asset value when I pull my assets out. And so I think what we saw during COVID was all 4 of these members of an ecosystem working together to be flexible and say, hey, let's remember, we're all people involved in this process, right? It's the underlying borrower that I think needed a lot of that flexibility, while also recognizing that as the investor, you may have other obligations that you did need liquidity for at the time. So it's really just that community coming together and working together to be flexible during that time.
Thank you, Eric. And Sana, you speak for the voice of a lot of investors as well. And what have you observed?
Yeah, absolutely. And thank you, Eric, for kicking that off. I think absolutely agree. At the sort of beginning of this crisis, there was that sort of flight to familiarity and safety. And then over the course of the last 2 years, we've seen, similar to the waves of the pandemic, some of that appetite shift and ebb. I think that what we've also observed is it's been an opportunity for certain types of investors, and particularly in our community, which is the full spectrum of gender smart investors across different asset classes. There's been an opportunity to get even more refined and more specific in approaches, to be a lot more context specific, to be tailored. We've seen great examples also pop up, and in the context of financial inclusion, I think of the likes of the Catalyst Fund, which is now on another wave of its inclusive fintech cohort, really refining that approach around gender and climate and financial inclusion, right? Excuse me. And then, of course, we have our amazing partners on the call from Women's World Banking, which has a blended finance structure that is built on the different layers of capital, and really thinking about what's going to be the right sort of mix to get this solution meet the needs of the end users that we're trying to get to. Other solutions around more impact linked finance as well. So really thinking about ways to, as I said, bring some of that specificity to the context in which the capital is being applied, and really thinking about more sort of fit for purpose capital. I think also, a great example here is, the Visa Foundation, for instance, with its Equitable Access Initiative, which is a combination of both grant and equity investments, laser focused on getting more capital to diverse and women-led owned businesses, but all the way from the fund managers to the portfolio companies to the women and the services that they provide. So from our perspective, I think seeing that sort of intersectionality become more of a core thread, and seeing more rigor step in where people have the data that they need as investors, and now it's really coming up with solutions that are helping get capital to the right context in the way that makes the most sense. More to come, but I'll stop there.
Thank you for that feedback. And I think what you said, that now that we have gone through this and seeing how the system respond to this shock, both on the ground, but also from an investor, is really testing what is their priority. I think, how can we take lessons from both sides and apply it so that we can be more resilient going forward for our clients and also for our partners here on the ground. And so I think maybe it's a little bit of a reflection as well of what kind of interventions, particularly I think on the side of Laura and Tom, during COVID that you have seen. You talked a bit about the response of regulators being something that is a bright spot that happened. But what are the other pieces that you have seen, products development in terms of interactions with the other stakeholders, that you think will continue to serve well to contribute to the progress in gender equity? And I will also ask the questions if you think of anything that did not work. So maybe Laura, if you would like to share what you have seen.
Thank you, Celia. Yes, during COVID at the foundation, we offered extraordinary financial solutions. And I take on Eric's point. As investors, you always ask yourself, should I pull out? But here, it's very important to keep up fueling these micro enterprises, because that's what fuels also the expenses at the household levels, and the ability of not increasing vulnerability of these entrepreneurs any further. So I would say, like, keeping up these funds, it's absolutely essential during the time of crisis, together with something that also Tom was mentioning before, which is digitization. We were already working in digitizing our operations and our relationship model with the entrepreneurs. But I think that COVID just speed up even further, and also made our entrepreneurs more keen on adopting these kinds of solutions, because there was no other possibility to do so. So maintaining our funding has benefited almost 60% of our clients, has enabled them to operate and cover household expenses. And we also channel public subsidies, which were able to bank for the first time almost 300,000 people. But that was like during that time. So I would say like the two main things that prevail are still the financial inclusion services combined with a gender lens and specific products, and also using the benefits of digitalization. So we are working since 2020 in 3 axes, supporting businesses to make them ready for their digital transformation, also offer them digital training. It's not just about giving them access to mobile banking without training them properly in order to use technology to make their banking operations, but also to go online, to make these small entrepreneurships go online and make best use of technology for their businesses. And due to this, we are developing digital learning platforms in our entities right now, and also creating a virtual marketplace so they can have more exposure online of their businesses. We're also forging alliances with mobile operators to offer internet chips for female entrepreneurs, mainly, and also increase internet connectivity in remote areas of Peru and Colombia. And also something that Sana was mentioning before, it is clear that COVID showed the care crisis that was underlying, but it was very clear that we need to solve on how to combine the care economy together with economic participation in this low income population. So what we did was to create a wide range of health microinsurance with a lender lens for women for less than $1 a month. So these products are offering coverage so they can do health checkups, mammograms, cancer microinsurance, also maternity insurance for the lactation period. And I think that COVID has shown the need of bringing financial services to this sphere because social protection is just not present in this for this informal and vulnerable entrepreneurs. And also we have conducted surveys on cares and gender roles and violence prevention campaigns. And recently we're starting to look at how to foster care economy entrepreneurships as well as an economic alternative and reactivation for these entrepreneurs. So that would be like what we have been working as a result of what we have seen in the past 2 years.
Yeah, I would add too that there's a handful of programs and initiatives that Women's World Banking is focused on that have really been quite successful over the past couple of years. And it did take a change in mindset and what we were focusing on. But in particular, there was a shift to be more inclusive beyond working with MFIs. MFIs are still an important core part of our mission and our network, but our ability to also court and work with commercial banks in the emerging markets has been a huge gateway to larger partnerships, greater access to larger groups of women to influence. The other thing I would say too is that in addition to the commercial banks focusing on fintechs, working with startups and other organizations that are looking to develop solutions that want to and need to reach women in order to be successful. From a programmatic element, I would say that there was a somewhat of a macro approach and a micro approach. On the macro level, working with our leadership and diversity program for regulators has been a huge success. With the partnership of Credit Suisse, the Visa Foundation, and AFI, we've been able to engage regulators from across the globe to develop and invest in women in their organizations as regulators. The ideal behind this is helping them understand if we have women that are in decision-making roles, they have the ability to shape and formulate policies, which will then hopefully better suit women and take away some of the barriers that we're currently facing. That program has thrived in participation over the past couple of years as there is this greater awareness and desire to evolve in that direction. The other area that we focused on too is through our asset management company, and we do have a couple impact funds which we manage, and part of that core model for us is making sure that we have seats at the table when we take an investment, so we have influence at the board level. The result of that allows for us to ensure that the right conversations are being considered, that we continue to press to have women kept in management roles and executive roles, which hopefully, and our thesis is will continue to produce better services for women customers. So I think in aggregate, those have been some of the highlights that we faced this year. And I think, will continue to help us think about how we're investing in the future, where we can drive greater impact.
At first, also a shout out, full disclosure, we are proud investors in Women's World Banking Capital Partners Fund 1. Looking forward to supporting Fund 2. As I think with my advisor hat on, certain things that didn't work during the pandemic, I'd say it was really our, in impact investing, you look for your tribe, right? You got an S tribe, folks that are focused on the social part of things, which I think are a bit harder. You had the E tribe, which are the climate folks. And it was really the S investors that jumped to action first. And I thought what was pretty special was some of the E investors ended up saying, hey, let's tailor our work to meet the need here. But within meeting the need, I think there was a fine balance for managing at the investor level, liquidity needs, as well as the uncertainty, as well as the feeling of an obligation to help. A lot of the clients we work with have more assets than they're going to need in their lifetime. And so it became, okay, if we start from that perspective, what's our duty today to act now? Some examples of this were, some clients said, let's do all of our grant funding, let's double down on our current partners, and let's do it early in the year rather than waiting until Q4 to make those decisions. While on the other hand, you had some clients that maybe weren't as liquid as they would have liked. So they actually said, hey, instead of doing our early work in the beginning of the year, let's see how this plays out and let's wait to the end of the year. So I think in both cases, they're also managing the different legislation at the estate level that came out with the CARES Act. And so I think you had these different factors playing, and investors were trying to make the best decision they could at the time with the info that they had. And some clients kind of mentioned they wish they would have done things differently, looking backwards, maybe doing things a bit earlier. Some deployed capital to organizations that unfortunately didn't make it through the pandemic. But again, I think the investor tried to make that good decision. And when it comes to gender lens investing, was really focused on, at the time, let us try and be as impactful as possible with every dollar deployed, and kind of made those actions. And again, some worked and some didn't, but I think that call to action was the most powerful with the yes investors that we work with.
Yeah, maybe just to jump in, I guess, Eric, thank you for sharing that sort of doubling down on the S, but then also maybe thinking about how the gender can cut across both the E and the S and the G. And I think that's another sort of movement that we've seen pick up momentum. But I just wanted to come back also to what Laura and Tom was saying. I think, Laura, when you were speaking, what was resonating was some of the sort of technical assistance and capacity building support to really shore up and build the resiliency of the underlying enterprises. But then also I've been reading recently about some of the data gaps that still exist from a gender data perspective, and how the pandemic again showed that there wasn't enough insight that could be gathered on the exact impact that was happening on the ground to specific groups of people. So that's definitely an underfunded area that needs to sort of continue being built upon. And sex disaggregated data is all up like the bare minimum, but then how do we think about different groups of people, as you said, in these particular marginalized, vulnerable communities, because women are not homogenous, they have very different traits, there's all different types of intersectionality that's at play. So I think we can do better on that side. And then of course that I think then has an impact on the rigor at which you're able to sort of go down from an impact investing standpoint as well. So and just the last thought here is the consideration around gender norms as well is quite important, and how things can be sort of contextualized to make that even more specific to the needs of the communities being served. So would love to keep seeing more of that.
Well, thank you for all of your insights and feedback. What I'm hearing is both on the depth of the product, that not just financing, but the accompanying services, as Laura and Tom both talked about, of really bring a wrap around to support them to use the services. And then also at Tom's level, talking about actually at the gender equity at the organization level of not just the organization, but even regulators who can understand what is their priority, and that is very also a key thing that has helped. And then on the other side, as I hear from Eric and Sana on the investors, of really understanding what the intention of that investments is about and what they're there to support, is really key, because I think that we need a lot of these tools and resilience to understand what we can do better in the future. And I think, Sana, to your point on gender norms, a lot of that is also education and training too. People ask, like, how do you invest in something like that? It's really education, and through not just even the women client, but the household itself. And hopefully that would also help across the elevating the quality of the service that it intends to do. So I think there's a lot of work and advice that we can take with this as we engage with the organizations doing the financial services, even with the regulators that investors may come across when we are on the ground. And then also with the investors having more patience and have an interest and curiosity on data. And I would note that we do have a session on data on the third day, on Thursday, which is something that we also understand is so important to really see what the data is telling us, and can we actually use that data to also inform this decision making as well. So I hope you will join us on that. But coming back to the session, I want to see if we can talk about another question is, we hear a lot of financial inclusion being the fulcrum of what happened during this time and how the entrepreneurs have responded, but also want to understand we have a lot of issues at hand that everyone is talking about, from climate to governance and also general DEI perspective. I'm curious to hear, how do you see financial inclusion continue, or in its form or in a shifted form, will help in reversing not only the loss run, but also propelling the progression in gender equity? And Sana, maybe I can ask you to talk a little bit more about that again.
Absolutely, thank you. I mean, I think without a doubt, financial inclusion and decreasing the gender gap is a very key lever for gender equality. I think there's still 1 billion unbanked women in the world, and they look very different depending on the region, rural, urban, income level, etc. So there's still a long way to go. I think, part of what, as we see it in the conversations that we have, is it's at a few levels of support that are needed, right? So Celia, to your point, like, what is the level of awareness building that remains? And that is at the household level, thinking also about the life cycle of financial inclusion, right? The needs look very different depending on when you're younger all the way to when you're older. And then also, how does that intersect with care needs, for example, right? So how can we be taking this sort of broader life cycle approach? The aspect that was brought up, I think, on digitization is also quite important, because obviously with the pandemic, we're doing this forum virtually, and we're all very privileged to be able to do that. But if you don't have access to the basic technology, or don't even have the gender norms prevent you from having your own mobile, well, then how are you going to be included in the system? So I think that's the sort of second layer, is how do we entrench the infrastructure with a gender lens, such that we're thinking about the specific needs of women and girls from the get-go. And then I think for investors, it's the same kind of thinking, and where can we be embedding a gender lens and integrating it across the investment life cycle, ultimately, if the objective is to improve gender equality. So I think that we can be thinking about, in a blended finance deal or other sort of transactions, where is the opportunity to really think about this as smart investing that helps to not only mitigate the risks, but really speaks to the opportunity. So a few levels, I think, of intervention from my perspective, but would love to hear from the others too.
I think Tom and Laura, you are in the middle of that financial inclusion work. So what do you see? Please.
Yeah, happy to jump in. I agree with Sana. I think I think it's really important to look at the levels of intervention that are needed, levels of inclusion, that have to be accomplished. And I think one of the most incredible things that I still land on at this point in time in my career is that, access still does not equal utilization. And so we talk a lot about the exclusion of women in the process and inclusion, but I think if we lose focus on the fact and only try to target the inclusion piece of women, it'll be too easy to walk away thinking we succeeded. And so I think it's really important that we're talking about the other elements which really embrace the experience around inclusion. And for me, that is taking the policy side of things and understanding regulation and making sure that there's an ecosystem that allows women to participate. But then I think it's working with the financial institutions, either through the investment routes or through the types of TA programs that we deploy to help them really understand the user's needs. It's too easy to develop a solution, again, that's still targeted towards a man and not think about what those women's needs are, and therefore it becomes unattainable. And then in addition to that, I think is wrapping in the user experience piece of it too, because the experience the woman has to have has to feel comfortable, it has to feel trusted, it has to be reasonable and usable. And so I think by taking those things and those elements of inclusion and putting them together and really making it customer centric for the women at the end of the day, we'll have stronger institutions which will perform at a higher level, which will produce greater returns for the investors. And ultimately, the ecosystem that supports from a regulatory environment will be inviting.
Yes, definitely. I agree with Sana and Tom. I would say that financial inclusion is paramount to foster female entrepreneurship, not just in Latin America, but worldwide, everywhere. And also taking on what Tom said before, many women lost their employment, so they are starting their own businesses. And to start a business, you need financial services, especially if you have less capital or you don't have the assets to start with your entrepreneurship. The problem is that 56% of the unbanked are women, as Sana was mentioning, and the gender gaps are widening. They're not closing, and even more with COVID. So it's not just, but on the other side, it's not just about having a bank account. We need to go a step further. It's having a bank account is like the first step, but you need to be able to use fully all financial services. And there is a recent study that was done by Ipsos in the region, and which showed that women had disadvantages still in access, but also in use and quality of financial products. Only 11% of them are considered to be in the optimal level of inclusion, and more than half are in the low level, according to this study. And on the other hand, we know that the financial needs of MSMEs, according to the IFC data prior to the pandemic, were reaching almost $100 billion. So we are, as microfinance institutions, we're delivering these financial services for female entrepreneurs and the more vulnerable entrepreneurs in developing countries. Gender lens investment is coming in as well, but the needs are still huge. And it's also very important to raise this awareness about other financial institutions, not just microfinance, go beyond that. And also for the investors, they need to understand, as Sana was saying, that we need to have an intersectional lens because women are not homogeneous, and we need to have an intentional lens to it as well. So it's not just about having an account, it's about making them make the best use of these financial services as well, and combine it with financial education and digitization to have the whole impact coming in.
I'd throw out one quick comment, and Laura, I love the data that you're sharing on this panel, because I got two favorite quotes. One is, in God we trust, everyone else please show me data. And the second is, data just doesn't measure progress, it inspires it. So I think to the point that Tom made about accessibility isn't necessarily utilization, but the more data we can capture around financial inclusion work, it should inspire us to do things either different or differently to make it more effective. And I think that's an important piece of this conversation as well.
I think that question brings me to this question, even though we will talk a lot more about data, is in order for us to drive gender lens investing, both on the microfinance institutions level of collecting data, but also to be able to translate that for investors to understand what they have done to propel that improvement in the system, is what kind of data has been useful? I know this is a little bit the session that we will talk about later, but since I have Laura and Tom on the ground working and looking at those data, I'm really curious of the question of what you have seen that worked to measure the progress or measure level of success so far in gender lens investing and measuring gender equity.
Tom, I don't know if you want to start or should I?
Yeah, go ahead, please.
Okay, at the foundation, we have our social performance report, which is published yearly. And what we do is that we assess how our entrepreneurs perform over time. And we look at their businesses and we look at assets, sales, and surplus over the time. We also look at how they overcome their initial poverty levels. And we also characterize these entrepreneurs in terms of their social vulnerability, whether they're vulnerable or they're in poverty or extreme poverty, whether they are living in rural or urban areas, or what are the activities what they are dedicated to. So by doing this, we're able to assess progress over time. And then with COVID, what we have done is to start doing surveys, more specifically on how they have dealt with the COVID crisis, to understand much better what were the obstacles and the constraints, and to see how we could better serve them during this difficult time. So for us, it's very important also the dimensions of financial health, and we also look at their levels of savings over time. And so this is like a continuous exercise that we have been doing for the past 8 years now, but we are continuously evolving and looking at how we can bring in more data that can help us better to design better products and serve better their needs. Of course, with sex disaggregated data, but also with other dimensions of poverty that we are also incorporating with the multidimensional poverty index of Oxford, which is something that we have been doing for the past year to have this broader picture. So that's about data and what we are seeing so far, and some of the findings I have already shared them with you, but you can also go to our web page and find more data on performance.
Yeah, and similar for women's world banking in many ways. Some of the data that interests me most is really around the operational data of institutions. And so in particular, when we think about, I think Sana brought it up earlier, the customer life cycle is really important when you think about including low-income women into the financial systems. And so data which is supporting those decisions, understanding their behaviors and needs over time is really critical, such as the frequencies, the deposits and loans, the access to mobile and so forth. So I think those elements which really support that commercial elements of why to include a woman in your portfolio has been really key for women's world banking, our ability to progress conversations with commercial banks in particular. The other area that I find really interesting is from an operational standpoint, is through our technical assistance work that we do with our investees. So we go in and we do assessments to understand their gender policies within the institution, looking at their HR manuals, their hiring data, how they recruit and how they train internally to make sure that women feel supported and are rising through the ranks within the organization. The other thing in that same vein is that we look at the women market strategies of these organizations to understand the metrics that they're using to identify clients and progress them to become viable customers. So those have been really some of the key operational elements that I focused on that I think have really helped us progress much of what we're trying to accomplish.
And maybe just to add here quickly, I think that there's just a treasure trove of data out there from partners like, the Social Performance Task Force, CGAP, the Center for Financial Inclusion. And I think the point that you are bringing up, Laura, around financial health and resilience, like sort of that shift from inclusion to actually like what's happening in terms of the outcome, that I think that move also is an indicator of where the field is going. But Financial Alliance for Women as well has a really great data set. So there's lots to sift through.
Thank you, Sana. And I would add that the World Bank has the Findex index that not only talk about financial assets or inclusion level, and increasingly is adding a level of digital assets and also bank accounts versus utility. That's something that Tom talks about. So there are a lot of data and to measure the progress of it. Although on the ground, the context is so much more rich through the organization, having that touch point with their end clients. So we also look to our practitioners on the ground to also let us know what works. And then with a platform that we get to exchange information, share, oh, this works in a certain region. How does that work in another region? Sometimes there are regional differences driven by regulatory and social norms. So I appreciate that sources of data that come through. And maybe I can start taking some of the Q&A questions from the audience. So please put your questions in the chat. And I will start with this question from the audience, Anna. How does applying a gender lens investing approach contribute to measurable progress to gender equity, particularly beyond the pandemic, an investor perspective, perhaps?
Sure, thank you. So, I mean, I guess one side of the story here is some of the data and the proof points by themselves, right? So the growth and momentum of the gender finance space, there's about 20 billion across public and private markets that have been allocated with a gender lens since the last 10 or 15 years, right? So the fact that there's this constant growth is also this active recognition that there is a need and an opportunity to have gender as a factor of analysis as investors in one's approach. But to really sort of get to the other part of the question in terms of how do we know that we're actually doing good? I think that is an ongoing sort of exercise, not only for gender lens investors, but others, right? And the depth and the rigor that we're seeing that people are doing in terms of like, spotlighting actual case studies in action, right? And so an example here is the 2X challenge. And I encourage people to look at their site and some of the examples that they have there with really talking about, here's what it looks like to be really 2X eligible, whether it's at the ownership, leadership, consumer, board levels. And here's what it takes for a fund or an enterprise to actually qualify for this. So there's also, I think, that aspect of harmonization around what good looks like, which is helping to add to that. But there to the point that we were speaking about, there is a lot of data already out there, and now it's about really mobilizing more capital to show that this is an approach that's actually working. And I think there's more investors who are thinking about, yes, finance can be used as a tool for social change, and a gender lens enables you to really be centering the communities that we're looking to serve and to be just part of a smart investing approach. But yeah, others do feel free to add. Eric, Celia, I don't know if you have other thoughts too.
Thank you very much, Sana. And I hope that we all are seeing that being an important driver for us to think about. I think there's a lot of learning too, not just in gender lens investing, but how paying attention to different segments of the population through either looking at it through gender or other intersectional lens is really important for us to bring the right kind of impact, hopefully with the goal of understanding their needs. So I think it's a broader implication beyond gender. Maybe another question from the audience. I think it touched upon a lot of the examples that Tom and Laura also talked about, but I will bring that question again. In what contexts in which you and your organizations operate, what would you say are the best bets and approaches in building resilience of the most vulnerable communities?
I'm happy to jump in. I think, from my perspective, I think it's really important that we understand why communities are vulnerable. Sometimes it's so much further beyond just the financial inclusion component. It could be other elements which are cultural, it could be environment. You know, we could be talking about the climate change elements that are taking place and the implications that could have on rural farmers and their ultimate ability to transact and save. So I think it's really key when we think about best bets, is that we're looking at this through a partnership lens. No single organization is going to be able to tackle an issue and solve it on its own. And where we've been most successful is when we can work with other partners, such as Kiva, to really take on some of the greatest challenges in the world. And I would continue to encourage that to take place, and think about, you know, learning from the past, pooling resources, driving advocacy and influence into areas which, you know, people may just not be aware of. Because I think once that awareness is created, it creates that type of momentum and energy that's necessary in order to drive investment, to drive solution building, and ultimately lift the communities that need to be lifted.
You know, from an impact investor perspective, I would just add in and say that it's best to have a purpose defined for the capital that you have. Right? Many folks have different pockets of capital, from checkings and savings, right? Your money never sleeps. So what banking institution are you using? To your investment capital, to potentially excess, to foundations and donor advised fund capital. And so as you think about best bets, or where you want to have the most impact and potentially take on the most risk, my suggestion would be identify the pool of assets and list the impact intention for those assets so that you're clear on what you're trying to accomplish with those from a returns and an impact perspective.
Yeah, if I may, just very quickly, I would add to what Tom and Eric just answered. Hello, can you hear me?
Yes, we can hear you.
Yes. Okay. Now, if I could just add to it, I would say, like, to increase resilience, I would say, like, that's like the key. that's the key question that we all ask ourselves very frequently, and more even in the past 2 years. Not just about COVID, because there are other shocks that will happen certainly, and we need to increase resilience entrepreneurs. So probably savings is a big part of it, insurance, and I think that probably the financial education needs to do more to sensitize and raise awareness about the importance of these kinds of products for these vulnerable entrepreneurs, because they will always be biased to not to save, probably because they have scarce resources. So even if female have more tendency to save, there are always emergencies that might arise. So they will always keep some money, so they can use it for emergencies. So the need to step in and do more about the importance of how assuring the risk with insurance products and service, I think it's absolutely essential as well. And that has to do a lot with financial education and also training. So I would say those three. And then digitization, I think it's big for the future as well. I mean, if we don't give them the digital skills they need, probably they will be left behind.
And speaking of a tech-based firm that looked at financial inclusion, I hope technology is going to be a useful support to engage the end clients and help them grow their businesses and create more resilience in their livelihood. And I think we may have time for one more quick question from the audience. And centering on the co-creating with communities is so critical. Is there examples that can share of how that can be done, or how what you have seen of bringing co-creation in that process?
Yeah, I mean, I'm happy to share an example, and it's something that we did in partnership in the community with Kiva and others. I think part of the solutions that we're trying to find in this day and age and leveraging digitization has been around frictionless payments and low-cost transactions. And so even, through our partnership and participation in the Diem Association and trying to figure out how cryptocurrencies can be more broadly applicable and leveraged by the low-income community, I think is moving us in the right direction. I think it's absolutely key to be able to take social marketing and turn it into something that's transactionable within the marketplaces, especially like Southeast Asia. And even though the Diem Association and the Diem project itself did not lift off the ground, the ability to be a part of a community with all those different types of investors, different types of platforms, such as Novi and Blockchain Capital and Uber and so forth, I think it was really critical for us to be able to advance that conversation and get policymakers across the globe talking about this at a faster click, which will hopefully result in more frictionless transactions taking place at a fraction of the cost that it is now. Something I'm very proud of to be a part of, and it's one of the best failures that I had in the past 12 months.
Well, Tom, I think experimentation and trying is still also important. So I appreciate you sharing that story. And I think one thing that I'm hearing here is that there are a lot of multiple approaches to doing so. And maybe I can ask our panelists one more question is, we have heard the different aspects from taking on multiple gender lens approaches. And when we look at the design of products, we have to supplement access with the design of the products to encourage utility. So it's, bringing more training and education also helps. And then understanding the user experience in terms of getting data, understanding their different identities, seeking their feedback. So those are all elements that needs to come together to work. And then from Eric's perspective of investors having the patience and also to understand where their intention is to drive those impacts. So with all those lessons that I think is taking from this panel today, I'm curious if I can still ask all of you to share a call to action to the audience today, starting with Sana. What would you ask all of us to focus on and be prepared to take our action forward?
Absolutely. Thank you for this great conversation. So yeah, my call to action is there's enough data. Let's just keep moving on the how and get more gender smart capital out the door. There's enough proof points. We, really just need to be thinking about where can you be building a gender lens across the entire value chain, across the entire investment cycle, if we're all committed to a more gender equal future. Thank you.
And Eric?
Yeah, I'd say impact investing is really being present in your decisions, from your consumption decisions to where you bank to where you invest. Your money's out there doing something in the world. So I just encourage you to reflect on, is it showing up in the world in a way that's aligned with your values?
Thank you. And Tom?
I would reflect on the fact that history repeats itself. So let's make sure that we're not caught off guard again. The next time we roll into this, the next crisis, let's be prepared. Let's make sure that digitization is well underway and not playing catch up. Let's make sure that end users feel comfortable with it and are educated and trusted. In addition, I'd also ask that everyone really commit to pushing and holding folks accountable for gender disaggregated data. It's absolutely critical in making sure that we understand the types of progress we need to be making with the use of that information.
And Laura definitely shared a lot of the data of what happened and transpired during COVID. And what will be your call to action for us, Laura?
Well, I would say that WEF economic empowerment gap data shows that we need 135 years to be closed, to close this gap. We definitely need to speed up the pace and reduce this time. It's in our hands as practitioners and also as investors. So I would invite other investors to jump in, because the needs are still there and have widened. So I hope that this panel has contributed a little to put an extra effort into gender lens investment as well. Thank you.
Thank you very much, Laura, Tom, Sana, and Eric, in sharing your insights and really bring a wide kind of perspective of being on the ground to the investor level. And I hope the audience also enjoyed this conversation. So we will pass this on to our next session and hope you can join us, which will be focused on impact strategies, advancing women financial resilience. And thank you all.